All right, so we're back live. Let's see if you guys can hear me now. 7 seconds in, I still don't have any views. Let's see what happens. All right, we got someone. Okay, if you guys can hear me, let me know down in the comments. We are going to do a housing market update and showing you guys everything that is happening in the Las Vegas housing market. So we got two viewers. Steve.
I don't know what you mean by we got to view.
Steve, are we live? Can you hear me?
Yeah, I can hear you clear. I don't know.
Awesome. All right, I'm gonna hang up right now. So we should be live right now. Good to go. Ladies and gentlemen, it looks like you guys can hear me now. So I apologize for earlier. We went live, and however, we had an issue with our audio system. We're gonna wait a little bit. There we go. Thank you, Susie, for letting me know that audio is good. Appreciate it. Let me know down in the comments right there your questions, concerns. Hit the like button if you guys can hear me. And also hit it because the YouTube starts pushing it out. So maybe more people will join the conversation. We'll have a good, healthy conversation about the housing market and what is happening out there, what you guys are seeing in the market. I'm going to share my opinion as a realtor out here in Las Vegas. And also my opinion, what's going to happen in the future. What is the outlook for 2023? Is now a good time to buy? Should we wait? Is it a better time to buy maybe next year? Are we going to have better deals next year? So should we wait until, let's say, May or spring 2023? That's the topic for today's video, and love to hear your guys' comments. But don't just write on there everything is gonna crash. Next year we're going down another 50%. Give me a reason why. I would love to hear from you guys to know what goes through your mind when you are coming to the conclusion of, yes, the housing market is going down another 50%. I want to know why, and then I'm going to give you my opinion and debate it whether I think you have a good point or not. In addition to that, we're going to go over first right now over all the data. So we're going to cover all the average sales price right now in Las Vegas, how much activity we have, how many homes are being sold, what's happening with the builders. As a specialist when it comes to new construction, I saw a lot of new construction. I see every day what's happening right now with the crazy amazing deals that they have on the market. So yeah, I can't wait to share all that news with you. And for the builders, it is, from what you saw from the title right there, it's the housing market disaster. So for some builders, it's a disaster. They're having a hard time selling and moving inventory. So I'm gonna share that with you as well. So let me share first of all the screen with you guys. Let me know if you guys can see right here. All right, let's see. Latest Ecamm Live. What's going on here? Can you guys see what I see here on the screen? Let me know down in the comments if you guys can see right now the 10-year Treasury yield, which is the what shapes pretty much interest rates. Let me know down in the comments. Anybody? Can anybody help with that? Right. No comments so far. We got it. Yes. All right. Thanks, Steven. Appreciate you letting me know. Thanks, Susie. Yes, we can see it. Okay, awesome. All right, so let's start getting into this. We're going to talk about what's happening in the real estate market. Obviously, we've seen ever since May a decline in home purchasing prices. And the simple reason why this is happening is because of obviously the 10-year Treasury yield going up. So the Federal Reserve has decided to start raising interest rates, as you can see right here. And if we go back to the 1-year mark here, or actually let's go 5 years so it gives you a better perspective. We were, in the past 2 years in very low interest rate environments, which really stimulated the market to really go up in value. And all the way until May, we had price increases where, home prices started going up and up and up, and they would never stop. At least that's what it appeared. As you can see here, back in 2019, the average sales price here in January 2019 was in Las Vegas, and this is for all kinds of property, $315,000 across the board. Then we had home appreciation, happening, and we were still going up and everything. 2020 we had where home prices were going up. But then we had this 2021 year and 2022, which really pretty much exploded, and we had a average sales price at the peak for all construction types of $523,000. Just for perspective, since January 2019, or let's say before COVID, right, on January 2020, we were at 323. Okay, average sales price in Las Vegas. We went up in June to $523,000. That is a $200,000 appreciation, or approximately, I would say, what is that? From 322 to 523, that's almost 80% up. What is that? That's crazy. It's almost doubled, right? I would say probably like a 70% appreciation right there. This is across all property types. And then ever since then, we had a correction. Now we're down to 465,000. Now this is the average sales price. Okay, so we have to look, however, at the median sales price, which is a little bit more accurate when it comes to what home prices have been selling for the median household. Okay, there's a little bit of a difference there, but we look at let's go to January 2020, right before COVID. We are $282,000 average sales price, and at a peak we were at $445,000. Still, we have a lot of appreciation. Right now we had a correction, and we saw, since the last video I did, we were at $405,000 in October 2022, at $405,000 the average home. So let's say a 2,000 square feet home, single family home, is going to cost you $405,000. Right now it's going to cost you $393,000. Okay, so that's what's happening right now in the market. We're going to look at a few more things before we start getting into the Q&A. So get ready with some questions. I'd love to answer them if you guys have any about the market and what you guys think. Also, comments and concerns, all of those are welcome. As we can see right here, Jimmy says, yes, we can see it. Okay, perfect. Any comments, let me know. I'd love to go over that Q&A with you guys. All right. Let's see. So we are going to look right now at the months of supply. Months of supply pretty much means how many months of inventory we have on the market, which means, let's say we stopped listing homes. We wouldn't have any homes come back on the market. Come onto the market. So no more new sellers. It would take us this many months to run out of homes, is what it means. And right now in October 22, we were at 3.7 at the peak of months of supply, down to 3.4. So we're seeing a downtrend. So inventory is going down while the amount of home buyers is not going down as fast as inventory, which means the inventory is going down, which is not a good thing for home prices, at least to have some more depreciation. It's actually going to keep going. Prices are going to start going up at this rate. So that's what we're seeing right now with the months of inventory. As you can see, we have a decline, which means, things can start flipping around right now pretty soon. And that's a really interesting point of view that we see from some people. At least that's one of my opinions about the real estate market, at least for 2023. But we'll share more of that later on together. Homes for sale. How many homes do we have for sale? As you can see, inventory from the peak of 12,756, we're down to 10,000 homes, 10,800. But this could also be due to the holidays. Not many people sell during winter, but during the holidays. But however, it's still a downtrend, so that's interesting to see. And most likely this is going to keep going down, because here's what's happening. A lot of people cannot buy because of interest rates being so high. However, a lot of people also cannot sell. So we might get less people purchasing, even less people than how many people are putting their house on the market, if you know what I mean. Which means less inventory coming on the market. Now, last thing I wanted to cover is how many homes are selling, like the amount of homes. This is very, very important. So we look at closed sales. And as you can see right here, this was back in January 2019, very low activity. This was a really good time to buy. And then we had another low time like this was back in May 2020, which was after the pandemic, during the pandemic, when nobody was selling, nobody could get out of their house, and nobody could list their home almost, and that's what was happening. And then we had a bunch of activity. This is the amount of homes sold per month, okay? So that's what's happening. So we had back in March, which was pretty much the May closing, so we saw the highest price, 4,500 homes sold in 1 month in the entire valley of Las Vegas. Trending down from 4,500, now we're down to 2,161%. That is about a 60% decrease on homes sold in Las Vegas. That's really high. So 60% less homes sold in the Vegas market. That's why a lot of realtors are now suffering because they cannot sell homes. At first, they were selling, let's say, 10 homes a year. Now they're selling 4 homes a year, okay, on average. So that's what's been happening. A lot of people are leaving the industry, taking a second job for the current situation because activity is so low. Now, is this going to stay low forever? Most likely not. If we look at history, at least that's what we can see. Once it goes down to this level, it's going to rebound. And this is my point right here. You can't really time the market perfectly, but you can kind of get an idea. Hey, when it's a good time to buy when you see these market shifts, and you see right here, January 2015, when it goes down so much that nobody buys, at some point it explodes right after. So after every downturn, right, there's always, the little bit of light at the end of the tunnel, right? It's just periodically it happens every year, every 2 years, it happens. This is usually coincides with the holidays where activity goes down and then it picks back up. It's not an exact science, however, that's what it is, right? And you can see here it kind of coincides here by the end of the year, and obviously these are the closed sales, so this is when it closes, but when it gets under contract is when it matters, which is usually about 30 to 45 days before this house closes. So activity down. Now probably at the beginning of the year we're going to see activity go back up if we look at history. Now probably the only exception was the December 2021 where we saw a little bit of decrease, but then boom, back up. So that was the environment that we were in 2021 and 2022. Anyway, I bored you guys enough with this. Let's get to the juice, to the really good stuff. So talk about the builders, how they're in trouble and all that stuff. We got 16 people watching. Thank you so much. And 4 likes. Appreciate you guys. Hey, 16 people watching. That's a success to me. But we've had way more before, so I wonder what's going on. Let's see. So 10-year treasury yield, we talk about that. Let's look a little bit here what Redfin is talking about. Housing market update. Early stage demand up notably from October. So what's happening is here, ever since you look at the 10-year treasury yield, see, this is October right here. We were up at about over 7% for an average 30-year mortgage rate. Now here you're going to see 4.21, as you can see on the 10-year treasury yield. Obviously, however, the monthly payment is going to be the monthly interest rate is going to be higher than the 10-year treasury yield, because obviously the bank need to be making their profits as well, right? So you're going to add usually like about 3% on top of the treasury yield, which is going to bring you to about 7.25%. That's where we were at back in October, right? And the market was suffering a lot. That's what we're seeing right now on the home prices that we saw, where the average sales price was $393,000 here in Las Vegas. The reason why it's gone so low is because of these interest rates going up so high. And this is the average, resale homes. It's not the same for new homes. Every market is different, right? But this was the peak. And now we're at 3.480, which means interest rates have gone down by 0.75 of a point. This is due to the Federal Reserve kind of starting to talk about slowing down the interest rate hikes. And, the market kind of reversed a little bit and it corrected to 3.5. Now, can this keep going up? It could. In that case, real estate is going to keep suffering, or maybe not. I don't know. That's something that we need to look at in the future, that we need to keep an eye on. Home builders. What's happening with home builders? Oh my gosh. So many good deals. Probably right now, some of the best deals in the market. KB building some homes for a really really competitive price range. We're looking at, KB mostly builds in the Southwest. They have a bunch of communities. These homes, let's look at, where is it? There we go. Like something like this at Saguaro North, for example. $458 out the door. This is a house that is already decked out and everything, but they put in a bunch of upgrades. But the starting price right there, if you look at KB, let me show you really quick. Actually, let me go to their website because it's faster. What is that? No. KB Saguaro North. Let's look at their pricing right now. Saguaro Ranch, they're called. Landings of Saguaro Ranch. Let me show you guys. I want to show you here because they dropped their prices big time. And a little bit of also what's happening. Look at that. I have some really good deals. You can lock in an interest rate at 5% with KBHS. Now, this is an ARM loan. It's going to be locked for 7 years. However, after that, it's going to go to whatever interest rate is going to be at the time after 7 years, which is still a pretty safe option in my opinion. But, there's also a 30-year interest rate mortgages at 5.75. And this, it's selling like crazy right now. A bunch of people are buying. And you see these homes right here. You go down. Look at that. In the Southwest, which is a very central area, we're looking at 10 minutes from the Strip, okay? Really nice new area. For, let's say, 1720 square feet at $395 base price. Lot premiums, it says home premiums may apply. It does not apply. We have a $0 lot premiums right now. They're doing incentives toward Design Center. I can't say how many because I got scolded before by KB because, they said I wasn't supposed to say it, blah, 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 and all that stuff. But they're doing incentives. So you can literally get this home with some upgrades, probably at $395 out the door. That's a nice starter home. 3 bedrooms with a loft, 2.5 bathrooms, 2-story home at $395. This was going before, I would say for $470, $475 is what this home was selling for before, back until last year. And this is on a track builder that you can build a house from scratch. So that's quite a big difference, right? Now, let's talk about a few other builders. Let's bring up Pulte here. Oh my gosh, so good. So many good deals. I can't believe it. Rainbow Crossing, 4,000 square feet homes going for probably like $750 over here out the door. Look at that. They have, for example, well, these are the starting prices, right, for 3,000 square feet home. And they're $650, right? Now they're giving all these homes away, probably with all the included options if it's a spec home, right? And also closing cost incentives. We're talking about $200,000 off on the price of this home from before, which is a huge discount. We're looking at 25%, 30%. And that brings me to my point, which is it's really a case-by-case scenario. KB is down 10%, right? When you see Pulte, they're down 20, 25 on some situation if you get a really good deal. But if you build it from scratch, that's not the same. You'll probably save, let's say, 10% on the house compared to before. So it's a case-by-case scenario. And within the community, you have different situations as well. They have the bigger floor plans here that are even more expensive, that they're giving some really good discounts on these. Anyway, that's the situation right here, just in the Southwest a little bit. Over in the Northwest, we have a lot of inventory coming back on the market as well. Summerlin, same thing, but I feel like Summerlin and Inspirada are not suffering as much, at least from my opinion, from my experience, just because, they are suffering, at least some of the builders, but not as much because they have the best school districts usually, Inspirada and Summerlin. So it gives you a little bit more that upper end buyer that is able to afford the house, even though the interest rate is a little bit higher. So they didn't have to adjust pricing as much as other neighborhoods, which, for example, Southwest, and I think anybody, if they had a chance, would probably live in Summerlin, right? Or Henderson, right? Some areas of Henderson. But due to the fact that, hey, maybe I can't afford Henderson, I'm going to go to the next best option, which would be, let's say Northwest or Southwest, and then, or Inspirada or whatever, right? And then those areas are the ones that are suffering probably the most because builders over speculated. Doesn't matter where you build a house, you would get a bunch of upgrades in it. I mean, you would pay a lot of money for the house. Okay, let's go back to let's see. We got 20 people watching, 7 people like. Let's see, Clutch and Stick. Hey, I always see your comments. I appreciate you, man. For let's see. Let me put myself back on. How do I do that? Here it is. All right, can you guys see me? All right, so Clutch and Stick. Ooh, a lot of comments. Let's see what you guys have to say. Are the buyers giving? Are the builders giving buyers incentives again? Holy smokes! Yes, they are. Price reductions, builders incentives, design center incentives, paid closing costs, lower interest rates. Like locked in interest rates for a long time. So it's a great time right now for buyers to buy, especially during the holidays, because these builders have to liquidate their end of year inventory, and they don't know how to, they just want to get rid of them. They can't, because so many people are getting out of contracts still because interest rates are so high, and the builders need to get rid of these homes, and they can't. So we are able to negotiate these prices down for most builders if it's a spec home, as far as my opinion goes. But then also on some new homes that you build from scratch, you can lock in an interest rate, 30-year interest rate at 5.5%, maybe even 5% in some situations, where and you get all the closing costs included, everything done for you. It's amazing. I haven't seen a market where I had so much fun with buyers going out there and buying homes. And you just, it's a little more work, because obviously as a realtor, you have to go and show a lot more properties, and you have to negotiate a little bit more versus before. But gosh, so many good opportunities right now, and it's such a shame that a lot of people are waiting on the sidelines instead of making the move. And if they have to move anytime soon, and try to get a home under contract, versus trying to time the market, or maybe enjoying the holidays. I understand, that's all great, but if you need to buy a home, now is the best time, in my opinion. Now, all right, let's get into next question. Everyone has to stack their money and prepare to catch their wave. It's that simple, but hard to wait for. I know, Clutch and Stick. I don't know how to call you. I don't know if you have a name. Let me know down in the comments. But everybody has to, obviously everybody has a different situation. If you're renting and your lease is going to be up in 8 months, you don't want to go into a mortgage as well. How can you afford not only your rent, which I'm sure is skyrocketed so much, but also how can you afford also a mortgage payment as well at the same time? That's just too much, right? So you have to wait until the 8 months are up in order to go ahead and buy a house. Or maybe you can start buying a house and then you get it built if you're buying a new home. And then by the time it's built, you get you get out of your rental. How much is the KB 1849X single story? Jimmy, thank you so much for the question. That floor plan is actually, it depends on the location that you're in. If we look at Saguaro North, where we're looking, Southwest, nice area. That home, I believe, it started around $430, I believe. Let me check really quick for you. There it is. Reserves a Saguaro Ranch, $450. Okay, so yeah, it starts at $450, but then you have to consider, and it's the same. This is the 1909 floor plan. It's the same as the 1849X. Actually, I like the 1949 better. But yeah, $450 is what the 1849X starts at. No lot premiums. Pretty much they'll waive it. If there is a lot premium, it depends on the lot. It might be like $4 to $5 grand. Compared to, if any of you guys were in the market, let me know down in the comments what your lot premium was for KB back 6 to 8 months ago, where they had lotteries, 200 people on the call. They had a lot premiums of $20,000, $30,000. That's what it was. Clutch and Six says, in my case, it's going to be a finisher. Not everyone can live in Summerlin. What do you mean by a finisher? I remember 2007 well. The co-workers were pressuring me to buy. Just laughed. 2014, I finally got my house at my number. Now it's worth 3x what I paid for it. Maybe 2x now. No, I'm kidding. Since the prices have corrected so much. Oh, there it is. You just said my bad, 2x. But yeah, I mean, everybody, has a situation. That was, however, an opportunity of a lifetime. We've never seen a correction like that. And that was due to the fact of the mortgage companies that were just speculating and just doing some shady stuff underneath the rug. They would just package all these loans that were just don't want to say that word. They were really bad loans and from people that didn't even have a job, no income, nothing. And they would purchase these homes and they would bundle them all up and sell them as a good, bond, which it wasn't really good, but it was all a scam. And home prices kept going up and up and up because anybody could get a loan. So if you give the opportunity for people to speculate and get an opportunity to buy a home like that when it's overpriced, yes, for sure. That's not the case anymore, but we are seeing now the correction due to the fact that the interest rate's going up, which is crazy. So, interest rates going up is, squeezing out the heck out of buyers, but you got to consider if you're renting right now, what's your alternative right now? You're paying so much on your rent, and well, it's probably not as much as what your mortgage would be. Maybe on the average home, right? Let's say 2,000 square feet, you would pay, let's say 2,400 a month for your rent on average, versus if you were to buy that home, let's say you buy the KB that I told you about, the average sales home, right? You're probably going to be paying about $3,000 a month, because you're coming out of pocket with, let's say, 5%. So that's a lot more money, right? You're saying, why would I buy and spend an extra $500 a month versus renting? Well, you don't know how long that rent is going to stay for that amount. At the end of the year of your rental agreement, the landlord could simply bring it up by 20, 30% the rent. So that's what happened during COVID, right? That's what happens actually in high inflationary environments, because people don't understand that the landlords have higher expenses. They know they can squeeze out the renters more money out of them because they cannot afford a home, so they're going to bring up rent prices. So right now you'll be saving money, but in the long term you're not going to create that generational, that wealth that you need, and you're not locking in a 30-year mortgage that will set you up for success in the future. So yes, you're paying more upfront, but then in the future you're gonna be well off having a mortgage. This is just my opinion, by the way, guys. I'm not a financial advisor. I don't know your situation, so I cannot give you financial advice, but this is what I think, and that's what I'm doing personally right now. I just purchased a home right now. It was a fixer-upper, another one. I love fixer-uppers, for those of you guys that know me, and I'm in the process of fixing it right now with a good friend of mine that is helping me out. And, I don't stop buying when it's a good market or when it's a bad market, because the real estate investors, they don't invest only in up when the market is going up. They also invest when the market is going down. Actually, they probably double down when the market is going down, because that's when you get the best opportunities. Is it a bad time to get my real estate license? Alan Yee says, currently studying about 55% done. Alan, I think it's never a bad time to invest in yourself. I think if you want to be a real estate agent, you're going to have to work really, really hard, especially in a downturn, because now you're competing. Imagine, I think we're at like 20,000 real estate agents here in Las Vegas right now. So how are you going to stand out, compared to all the other 20,000 agents that maybe have all the experience, way more experience than you? And how are you going to get into that top percent realtors that pretty much do 90% of the transactions, right? And that's the question, right? How can you do it? And that's going to be a lot of work. You're going to be able to set up some good systems in place where you can provide the client a really good service, and you're going to be able to market yourself really good to the point where you can actually scale your business and get a lot more clients. And yes, you can make it. I think it's the best time to get into real estate, because right now, yes, you're going to have more competition, but when the market does explode, your business is going to explode with it, and you're going to be ready to take advantage for it, because you're going to have the experience, you're going to have the systems in place, and you're going to be able to scale your business when the market does flip around. And instead of selling 2,000 homes a month, which is what's happening right now, we're going to be selling 5,000, just like what happened, last year. I like that home very much. Jimmy, I know, yeah, it's a great floor plan, the 1849, but you should check out the 1909. I like that one even better. And it gives you not only the 3 bedrooms, it also gives you a den, or you can turn it into a 4-bedroom. And there are some other good options as well in today's market, so you should check out Richmond. There's the Sarah floor plan right across the street from Saguaro North over there. And up in the Northwest, ooh, some great deals up there. Newest community right now opening up, what's it called? Talus. Whew. Great deals. 20, 30,000 less than what they are in the Southwest. Amazing. Omila says, is it a wise idea to get 2-1 buy down with seller credit and refinance after a year or two? Else buy permanent buy down? Any prediction about the mortgage rates? Good question, Omila. All right, good questions. Is it a good idea to get a 2-1 buy down? For those of you that don't know, a 2-1 buy down is when the builder pays for you to buy down your rate. Let's say the first year let's say the average 30-year rate is going to be, let's say, 5.5, okay? But they do a 2-1 buy down, which means on the first year you get 2 points off of your interest rates, which means you're going to get a 3.5% interest rate. Second year is going to go only 1 point off, which is going to go to 4.5%, and then it's going to stay the same at 5.5%. My opinion, if you can, and if it's free, because right now a lot of builders are giving a lot of incentives, take it, because that rate is that money is going to come back to you right away. Let's say the interest rate buy down, a good estimate is going to be about $10,000. It's going to cost the builder to buy it down for the to do the 2-1 buy down. Okay, so they give you this incentive for free or whatever, instead of taking off the purchase price, you get the incentive, and then you use that incentive, because now every month your mortgage is going to be, let's say, $500 less on the first year for 12 months. And then the second year is going to be $250 off. And then the third year is going to be the same. So you're saving potentially, 500 times 12, that's $6,000. 250 times 12, that's about $300. That's like $9,000 of savings, right? Usually the numbers are a little bit different. Usually you get a little bit more even back, but that's what you're doing. So yes, if you have the opportunity, take advantage of the 2-1 buy down, and take also advantage of their 30-year rates. A lot of builders are doing that, at least the biggest ones. Else by permanent buy down. I think you were saying, should I take the 2-1 buy down or the permanent buy down for 30 years? Some builders are doing both, and you should be able to negotiate both together. But if I had a chance, I would probably go to safe. It really depends on every situation. If you're financially stable and you can afford, a higher interest rate, maybe you take the 2-1 buy down, and hopefully by within the next 2 years, interest rates are lower and you refinance. Otherwise, if you don't know and you're kind of worried about your budget, you have a certain budget in mind that you can't go over, and that higher interest rate is going to bring you over that budget, take the lower interest rate for 30 years. That way you're safe for 30 years. You're good to go. Jimmy says, thanks, Jack. Of course. You're welcome, Jimmy. Clutch and 6 says again, Jack, you can call me Greg. Okay, Greg. I can call my job Monday and retire. I'm waiting for the numbers to make sense. I'm in SoCal and I'll remain in contact. Of course, Greg, whenever you're moving out here to Vegas, just like any other of you guys watching, I'd love to assist you and be your realtor. Little Philly says, will the builders stop building, or will they just move to no options building for their spec homes? Oh my gosh, such a good question, Little Philly. Oh, shoot. Yes, they stopped building a few months ago already, because here's what happened. All these builders in the last 2 years were saying, look, we're making bank here. Let's just go spec out a house, give it to the design center. Let's not give it to the buyer to design it, because if they fall out, then I can't resell it. It's difficult, with whatever options they chose. Let's go to the design center. Give them a house. Hey, spec it out. Put whatever you want into it. It doesn't matter. Just put in a bunch of options. And I'm going to charge the buyers that are going to buy that house all the options, even though they might not like them. They're going to have to buy it because this is the market that we're in. And they would put in a bunch of upgrades. The houses were super upgraded. Home sites premiums were $50,000, $60,000, $80,000. Ridiculous prices. And people were still buying them. I don't know why, because I couldn't sell any of those. And my buyers, when they see everything else available, because even in the uptrend market, there's still opportunities. All my buyers would never go to those places, and I don't want to. I can tell, I guess, because it's true. It's public, right? Pulte was raising the base price, but their lot premiums, they would do bids on it, and some people, just unreasonable, would just offer $100,000 on a regular home that wasn't really anything crazy. So that was happening. That's what was happening this summer, and now that's not happening anymore. So all those spec homes that they were doing, they stopped building them completely because they saw the market turn, and they're trying to still adjust. However, they have a backlog of a bunch of homes, which now they're going through it. Even during the holidays right now, they're selling them for a big discount. But once they get rid of all those houses, they're back to custom homes. Whoever wants a house, they need to go buy a lot, pick the whatever they want in it. They're not gonna keep building. A lot of builders are offloading realtors. They're offloading contractors and all these trades that they couldn't get a hold of before. Now they're getting rid of them. And they drop prices. There's no crazy lot premiums or anything. You can go in, you can pick between 2 or 3 lots, build your house, get incentives, all the good stuff is happening right now. So will they stop building? They already stopped building months ago, Little Philly. That's how it is. They just moved to no option builds. Wow, thank you so much for all the comments, guys. You guys are awesome. I'll check the KB 1900 floor plan and the other ones you mentioned. You should. You refer to certain houses as starter homes. For me, the next home will be oh, I see. I get it, Greg. Greg, yeah. I mentioned I see KB as a starter home because most people that purchase KB homes are starter buyers because KB offers a very low entry level point. However, KB, you can really make a KB home look perfect, like amazing, because they have a design center that's pretty good, and you can pick and choose all your options in there and make it look like a model home. So this is just me saying, hey, that's the starting level, but then you can make it as good as you want. This is if I'm referring to KB, but obviously if you want a finisher, like you said, maybe I guess a Pulte, a Toll Brothers, a Tri-Point, whatever you want. Alan says, thanks, I will work hard. You definitely should, Alan, and good luck to you, man. I know how tough it is out there to get started, and I wish you the best luck, man. It's a lot of work. Wishing you folks the best in obtaining a house. I've been following Jack for months. He has been consistent, always. Jack is giving you the game for free. Yep, that's how it is, Greg. Yeah, so we're out of questions right there. I think we're getting to the end of this video. I'm going to go over one last thing with you guys before we call it a day. If you have any other questions, let me know down in the comments. We'll do another quick review of the questions in the comments. And I need to go over what I think is going to happen in the future and try to go over what these future buyers are, what situation these future buyers are going to be in my opinion. And what maybe you should do. I don't know, based on your situation. I can't give you specific advice. I don't know your situation, but I can tell you also what I'm doing personally and what I think is going to happen with the market right now. So we see right now we had a knee-jerk reaction to interest rates rising so fast. Even the Federal Reserve has had these a little bit of a second thought on keep raising interest rates. They went from 75 basis points increase now to 50 basis points. So they already started the reversal. I don't know if they're going to keep reversing. It depends on what inflation does. But if inflation starts going down, which we're seeing signs of, look at, home prices going down, look at also pretty much car prices stop going up. They're going down now. Like they're bottoming like literally crazy right now, car prices. There is other items that are really they're going down in price big time. So inflation is starting to correct because we've had the last 2 years like crazy. If inflation starts going down, the Federal Reserve will have an excuse to bring down their interest rates, which means as a consequence, because interest rates was the only reason why home prices have gone down now by 10% approximately, right? And I was wrong, by the way. It's actually at about 11% right now in Vegas. So I did bet with my brother-in-law that it wasn't going to go down less than 10%. I was just throwing a number out there. So I got to give it to him. You win. They went down 11% since the peak. So now year over year we're still up a few percent, but still went down, so I was wrong, and I might be wrong again. That's the thing, about you can't see the future, but I can tell you my opinion. I said max 10%. I think I see a correction. This was like 2 years ago or a year and a half ago, and we're seeing right now that 10% or 11%. But is it gonna go down more? How much more is it gonna go down? I don't know, but I can tell you, in my opinion, I think we're probably gonna be bottoming out in the next few months. This is just my opinion. I see the real estate market really, the inventory going down already. And we see also the Federal Reserve adjusting interest rates by adjusting their expectations, which means you see also the 30-year Treasury yield going down. If this stays down or stays around 5%, we're going to start seeing that interest rates, staying lower and prices start going up again. Okay, slowly, but it will happen. Let me show you an example. Let me share my screen with you. Let's show you here. If you go and you look at the chart right here, let's go to the average sales price, okay? And you see here, where is it? Price, let's see, 10 years. No, I just need the last 3 years, okay? So if prices, every real estate is cyclical, right? So you have cycles where it goes up and down, but overall it stays, as with a flat line. If you see the monthly chart, yes, you'll see this. But if you average out rolling 3 months, you start seeing it start smoothing out. And that's what real estate is. It's a long-term game, right? Now this cycle right here, you got to consider 4% increase. That's what we had. We only had a 10% decrease in purchasing power. Okay, which means home prices are technically going up, because what you have to look at is the average price of a house per month. That's what people buy a house based on. And because of this average price of a home being so high right now, we are technically seeing real estate being more expensive for people. If interest rates go down or stay the same, we already bottomed out. Okay, if interest rates start going up again, okay, we can see a little bit more of a correction, but I don't see much of it more, okay? And then in the future, we're going to see prices eventually bottoming out. We're going to see a softer decrease in home prices overall. And then we're going to start seeing that increase going up again. Because at the end of the day, in highly inflationary environments, this is what it comes down to at the end of the day, okay, guys? In highly inflationary environments, you are going to have home prices going up overall. You look at the payment every month is going up, that's for sure. No question about that. However, home prices going up overall as an average. And this is my opinion. I think if you're a renter, you're crazy. You should buy right away. I don't care. Don't go with me as a realtor. You think I have a bias, whatever. Doesn't matter. Go with another realtor. Don't even call me or anything. I don't care. But you are wrong to stay as a renter, because not only you're throwing away equity, every house is already a savings every month as long as you buy it right at the right price. And right now there's plenty of deals out there. I'm having a blast. Okay, I'm loving this market. I love going out and getting deals for clients. It was frustrating when the market was crazy, where I was looking for these deals for clients and I couldn't get the right house for them, because that's all I have for you. Sorry, there's nothing to sell. Prices going up every week. It was ridiculous. Now I'm having a blast. And now it should be the time, at least for renters. If you're a renter, you should get out of renting right away. Because right now your your rental is like $400 or $500 less, which is always the case. When you buy, you're going to spend a little bit more every month. Maybe in some times in history it was a little bit less. But overall, if you look at history, when you buy, it's probably about the same. Even though it's like $500 more right now to buy, you got to consider, if you stay in rent and next year they bring up your rent 10% up, then what? You're breaking even. Like 10, 20% up, you're breaking even. And then what? Then you have to buy later on. How do you know that the market is going to go down? What if it bottomed already? How can you time the market? So timing the market is actually a foolish thing. I believe if you are in the situation, you can afford the payments regardless, you should buy. You should push yourself to work harder. If you can't afford it, get a better job, work harder, work extra time, afford a place, because in the future, it's going to pay off big time. This is if you're a renter. Now, let's say you already own a house. And what should I do? Definitely don't sell. Definitely stay in the house because you have a 3% interest rate most likely, or even lower than that on the house. So, or you must be crazy to sell a house. Definitely that's the case. So definitely keep that house. If you own a house and you plan on increasing your portfolio of real estate, buy more real estate. Take advantage of the situation. I bought at the peak back in May. I bought my personal home. I'm taking advantage of the dip, going out, and I'm buying homes 20%, 25% off of what they were before. Even if the market keeps going down, 25% of what the market is right now. So even if the market goes down even more, it's got to go down another 25% for me to break even. And if for the long term, so it doesn't matter. So yeah, you should buy if you're an investor. Let's say you are just a home buyer. You're just, you know what, I'm going to retire. That's it. I'm good to go. Then you probably shouldn't be. You're not in the market anyway because you already have a house. Stay put. You're good to go. But definitely if you're a renter, you're going to be a loser in the future. Maybe not in the short term. In the short term, you might be saving a few $100s a month. But in the long term, you're going to be suffering big time because with this inflation happening, and this is what they're saying, it's like a 7%, 8%. But just go to the grocery store and see if it's really 7 or 8%. Anytime I go in there, I can't get out of the grocery stores with less than $100 bill. I'm just going in to get some cookies. I'm going to spend $100 there because it's crazy how expensive everything is. I remember when I was little, I was 8 years old. It was right before I moved to Italy. I went to the grocery store and I remember my mom was bringing me in. I was in the carts or something, and we got out. We got out with two carts. This was back in 1990s, okay? 2 carts of food. Like we couldn't fit everything in one cart, so we had to get another one. We filled them both up, and our bill was. I remember she said it was over $100. I was like, oh my gosh, she spent $100 today. That's crazy. And looking back right now, if you were to do the same grocery store, it probably cost you $400 to $500. That's inflation right there. And it's the same thing with real estate. It's going to happen to people. So that's just my opinion. You should get out of renting immediately. All right, let's see. Jaime says, I saw that Toll Brothers in Sky Canyon reduced its price by $50,000. Here are other incentives that they offer. Are there other incentives that they offer that they don't advertise to the public? Hey Jaime, thank you so much for the question. So Toll Brothers up there in Sky Canyon. I was about to buy in May in Sky Canyon. I saw the deal and I was like, oh shoot, this is so. I love the house. It was amazing, and probably wouldn't have made sense. It would have made sense for me to buy whatever, but I just couldn't pull the trigger because they were overpricing these houses big time. Now they're struggling. They're laying off salespeople. They're laying off construction workers because they're starting to slow down. And yes, they reduced prices by $50,000 on their base price. And that's just because the market is going down and that's what they're doing. However, are they offering more incentives? They are not. They did, I think it was in Valera. They dropped by $50,000. And I have a client there. We asked for a price reduction, which we're waiting for. We put together a whole letter, and that's what you have to do. If you're in this situation where, prices went down in that community that you're in, you have to put in a request to the builder. You got to tell them, look, here's the situation. Make it nice. Not being nice is never good. Okay, so tell them, look, I love you, Toll Brothers. I love the way you build the homes and everything. However, interest rates are so high, I cannot afford this house anymore. We're struggling with the situation. I need to reduce the base price of my house. Builders, they don't want to see you go away because they have to close these houses. They have to work on the homes. They have to keep hiring their trades so that they can keep their business open and they can make money because they're a publicly traded company. They want you to keep staying in that business. So most likely they'll come to an agreement with you. Now, don't have your realtor put in the request for you because realtors, if the realtor puts in the request, they cannot do which they're not as inclined to negotiate it. You have to do it yourself. However, ask your realtor to word the letter for you. And then once you get this letter out, they should drop that price on your home as well. Okay. Let's see. Are there any other incentives that they're not advertised to the public? Maybe they're saying that there's not, because what they did is they said, hey, since we're not selling and we gave all these incentives out, they were doing $50,000 off. So half off of your first $100,000 at the design center. That's what they were doing. So 50% off of that is what they were doing. And now they're back to, they said, no other incentives towards design center. We're just going to drop the base price. And then we're going to figure out what we're going to do with the people that are currently under contract. Because they take 14 months to build a house, 12 to 14 months to build a house. So, yeah, that's the situation. And the other reason why you don't want your realtor to send it over is because they were going to do, most likely they will do something like a, what you call it? It's the non-disclosure agreement where you cannot tell anybody about what they did with you. Okay. And the realtor cannot be involved into it, especially if they sell multiple homes in that community. Really dangerous. Also interested in a home with a multi-gen or casita. Which builder would you recommend in Northwest Las Vegas or the Southwest? 2 builders. D.R. Horton has a great floor plan with that one. Lennar has the other great floor plan. They're decent builders. They have these spec homes. They only build spec homes. Right now, they're letting you customize some things, so they're not starting the project until they have a buyer. But they pretty much, you have 2 or 3 options on your cabinets and stuff like that. And cabinets, countertops, flooring, that's all you get to choose. But then floor plan, the good thing is most of the things are included, most of the things that you want in the house. But there's a great opportunity right now over at Acadia Landing. They have these 4,400 square feet next-gen homes, 2 stories. They also have single stories. Great deals over there. Half-acre lots over there, too. For going into 600s, 700s, okay? But if you get the bigger one, 4,400, you're probably going to be maybe 800 or so. But that's something to see also. Depends on the lot. A lot of options that they put in. It's a case-by-case scenario. And then also you want to check out Lennar over in Sunstone. They have a good community where they have a nice next-gen option. 3,300 square feet, I believe it is, or 3,000, something like that. If you don't want something as big as the D.R. Horton. And that's a 2-story as well. But yeah, let's get in touch if you're interested, Jimmy, in some of the homes. I'll be glad to go into more options because there are other options. There's also Richmond. There's Taylor Morrison that has next-gen options, and you might get a better deal on some of those homes if they have any specs available where you can negotiate the price down even more. But yeah, case-by-case scenario. When adjusted for inflation, a mortgage payment is actually less money than it was 8 years ago. Of course. Great point. I called you Greg, I think, before. Yes, Greg. So that's the point, right? When you're locking in a 30-year mortgage, it's going to be the same nominal price every month. You're getting average home, the median sales home right now is going to cost you $3,000 a month, right? With 5% down. If you're putting down more, like 20%, it's probably going to cost you like $2,500 a month, okay? With a 6% interest rate kind of thing. Maybe a buy down. So you're locking in $3,000 a month for 30 years. Okay. Go back 10 years and look at what the rent prices were or what the average mortgage payment was on that home. $1,500, $1,200. That's what it was before, right? So if you locked in at $1,200 a month or $1,500 a month, just in 2019, I bought a few homes in 2019 and it was around $330,000. My mortgages on those are $1,500 a month. Right now to buy the same home, it will cost me probably more than $3,000 a month. This was like with 5% down, like a home that I lived in. So I locked in that interest rate, that mortgage for 30 years and I didn't have to worry about it, right? Now, the same mortgage on that house is $3,000 or I can rent it out. And that's what I did. I kept the house. I moved out of the home. And that mortgage of $1,500 a month stayed in place. And now I have a renter in there paying me $2,250 for the same house every month. And actually, that's a good price because I could have rented it for even more than that. I had 2 applications the first day and I chose one of the people. So you're making $700 a month for that home because I have this locked interest rate, 30-year mortgage. It's like the best kept secret, at least, from anyone that actually, is trying to reach for that information. We'll get it, but that's the best thing to have is a 30-year mortgage in an inflationary environment. If prices double, you're pretty much getting the house with 5% down, and the house is doubling in value. Your returns are infinite right there. And if you cash out refinance in a few years, infinite returns, amazing. That's the power of the 30-year fixed rate mortgage. That's why I don't. That's also a reason why I don't think the market is going to crash, because I'm not selling those houses. Hell no. I have that low mortgage for that property. That's amazing. I get a renter in there, and I'll just live off of cash flow. That's what it's all about. The problem is that wages haven't caught up with inflation. That's true. I mean, Jeevan, yeah. Thanks, Jeevan, for the comments. Yeah, the wages haven't caught up with inflation. That's the reason why, because only people that own assets, which are usually rich people, take advantage of inflation. And poor people are not educated enough to make a move and get out of renting, which is usually the least wealthy person is a renter, on average. They're not educated enough to get out of renting and getting in control of their finances. Even though it's expensive right now, you can always refinance if interest rates go down, but you can't tell or force your landlord to give you lower rent. So yeah, if you can lock in that 30-year fixed rate, and you're good to go. And wages are not going up as much. You look at the same price for the house. Before, you had to pay $1,500 a month to own that house and be in control of it. Now you have to pay $3,000, right? It might be temporary. Interest rates might go down and all, but $3,000, that's 50% up on your mortgage expenses. Or even if you're renting, it went from $1,500 to now $2,200 a month that you're renting. So expenses have gone up so much, but your wages haven't gone up nearly as much because of inflation. Where the wealthy people take advantage of it. All these people that own assets are going to be I'm not saying in the short term. The short term, they might be hurting and all, but in the long term, if you keep the asset, whether it's real estate or whatever, stocks and whatever, you're going to be way ahead because of high inflation. We're going to be in a period of stagflation. Good point. We're going to go over stagflation in a second. Over time, though, it's never a bad time to buy a primary home if you'll be in it for a while. That's true. I mean, you got to rent anyway. And if you're planning to stay in it for like 3-4 years, it doesn't make sense to not be on it. Oh, you know what I was thinking, guys? I wanted to also do some kind of bringing in like an interview, not an interview, but like kind of exchange. I love this, exchanging things, because you guys are bringing up so many good points from the comments, and I just love going back and forth with you guys. But if someone wants to come in and wants to talk, on the channel, even if it's another realtor that has a different point of view or anything, just shoot me a DM, send me an email or something, and we'll get you in touch. We'll get you on the next live stream so we can have a live debate with people asking questions. I think that would be a great thing. We're going Jeevan says we're going to be in a period of stagflation. Stagflation is when pretty much you have inflation, but then you have bad economic situation where people are losing their jobs and all that stuff, but inflation is still going up. And that's painful, guys. That's really painful for the majority of the population. The people that suffer the most from it are the people that have the low wages, and the wages don't keep up with inflation. And that's what's happening. Look at what the Federal Reserve said, which pissed me off so much. They were like, "No, we got to bring up interest rates because it's gonna hurt. People are gonna lose jobs, but that's the only way we can do it to stop inflation." Also, you're gonna get people to lose their jobs so that you can make up for your mistakes. Ridiculous. Like the things that they're doing is just outrageous. And this is the problem with today's society, with the government and all, and what they're doing. The people that suffer the most are the people that are not educated on inflation and all that stuff, and they get in big trouble. But yeah, I agree with you. It's never a bad time to buy a primary home if you'll be in it for a while, for sure. Jimmy says, I saw you do a Pinnacle home, which I loved. Yeah, Pinnacle has some great homes. Custom builder, amazing. Do a bunch of single stories, big casitas, pools, and all that good stuff. Amazing. All right. thank you guys so much for staying here. It's been an hour. I wish I had a little bit more back and forth with you guys, which we did, and I'm appreciative of it. I appreciate all you guys for staying here, hitting that like button. If you haven't done so already, hit that like button, guys. Hit that like button. There we go. Got one more. And I'm going to see you guys on the next live. Let me know if you guys want to see these more often, just to give you more of an update on what's happening, what's going to happen. Yeah, you're welcome, Susie. Thanks for the info, she says. Susie, luck has arrived. Cool. Thank you so much, Susie, for staying in. You were here from the beginning. And yeah, I appreciate you guys all. If you guys are looking for a realtor, always feel free to reach out to me. And it's never bad to promote a little bit your services as a realtor. So I'd love to be your realtor. If you guys are looking for a realtor to represent you, whether it's a home that you're buying for yourself or an investment property, I do them all. I'd love to assist you. Ellen, thank you for the like. Thank you so much, guys. I'm going to see you guys on the next one. Hey, happy Sunday, by the way. And happy holidays to all of you.